Right, good morning, everybody. Please make your way inside, make yourselves comfortable. We do need to get cracking with the second panel. For those who are just arriving into this particular session for the first time, a very warm welcome to you. My name is Pippa Hudson, my co-host of the panel this morning, Katlego Tlaba, and great to have you with us. We are talking about disruption in this session. Obviously, the insurance sector traditionally dominated by a cluster of large, traditional-minded insurers, and they are suddenly being challenged on all sides by new kids on the block who are using technology to disrupt. And Katlego, I know you are quite attached to this topic and to our speakers today, so I'm going to let you do the formal introductions. Just to say to those joining us online, thank you for being with us, and let us know if you're having any issues with the streaming. Just drop a message in the Q&A section, and of course, at the end of the chat, we will allow 10 or 15 minutes for questions, and that means if you're here in person, just raise a hand. We'll get a microphone to you. To those online, just use the Q&A session. Katlego, over to you.
Thank you, Papa. Much appreciated. So I think we're still being disrupted by traffic in here. So we just ask kindly that people settle down. As people settle down, I forgot to welcome you to Johannesburg.
Thank
Piper,
you.
coming from Cape Town. I know there's a lot of our colleagues here who are coming from Cape Town as well, the mother city. So we welcome you to Johannesburg, the father city.
And the summer city. We're very grateful to have some warm weather. Thank you.
With Papa having done the housekeeping rules, one quick city keeping rule is that I had a lot of traffic coming into Sandton today. I was wondering why, and then it hit me. The Cape Townians are here. It is legal in Johannesburg to step on the accelerator. Don't worry.
Ouch.
Okay, so let's transition to the talk for this morning. The insurance sector has historically been dominated by large traditional insurers who have built up significant brand power in this space. But we have been seeing waves of innovation, of disruption, coming from different angles and different sources. Fintechs, insurtechs, a lot of technology players. And the question is, should insurers be worried? Are these new players coming in, as enablers at particular points of the value chain, or is it going to be looking different? Today's topic is adapting to disrupt, exploring the digital readiness of insurers in the age of non-traditional competition. And we have NIDA IBRAHIM, ASHISH DESAI, JODI CHRISTENSEN, who are going to be unpacking this topic for us. Over to you.
Studies have shown since 2008, connected devices have outnumbered people. In 2010, the connected devices were sitting at around 12 billion, and it's estimated that by 2025, that number will increase to 50 billion connected devices. And that has an effect on the way a lot of companies in different industries are operating and the change in which they're operating. This has also led to what we call the steepening digital trajectory that you can see on the screen. And it simply refers to the accelerating pace of digital transformation and technological change. Now, there are a number of factors that sort of characterize this digital curve. One being the rapid development and adoption of digital technologies and new technologies such as artificial intelligence, machine learning, Internet of Things, and the cloud. Second being the integration of technology into our daily lives, the way we learn and work, and the way that we interact with each other. And thirdly, a global interconnectedness of our economies. This steepening digital trajectory has implications for both businesses and individuals. For businesses, it means that they have to innovate and adopt new technologies in order to stay relevant and competitive. For individuals, it means that they have to be adapting and learning new skills in order to stay, I suppose, relevant in the ever-changing workforce. So, what does digital transformation actually mean? Digital transformation is a mindset. It is a way of doing business which is organized around your customers, and it's enabled by technology. So digital transformation is holistic, and it encompasses all aspects of an organization, from its business models to its operations, its employees, stakeholders, and culture, and uses technology to continuously improve the way that it delivers value to its customers. Digital transformation also requires a cultural change. It requires a culture that encourages innovation and experimentation. And you have to have employees who are willing to adapt and learn new skills. It is enabled by technology, but it is not just about technology. Organizations need to have a clear strategy on how technology will be used in order to improve the offerings to its customers. It is also not just about digitizing existing processes. So, for example, having an automated dashboard to use to collect your customer interactions instead of a manual Excel spreadsheet is an example of how you have made your existing business as usual processes more efficient. But if you're not using that data to inform or personalize your customer experience, then you have not digitally transformed because you're not using data and technology to improve that customer experience. Digital transformation also is a journey, it's not a destination. It is an ongoing process of continuously improving the way that we service our customers. Deloitte owns a global digital maturity database, which we tapped into to understand how different industries rank on this steepening digital trajectory. It is important to note that this curve is an average ranking of those industries. Leading the pace is the consumer industry with players like Google and Amazon, followed closely by information and communications technology, who by the very nature of the operations are more transformed. Banking and finance follows closely, with health and pharmaceutical just behind them, and insurance and energy are lagging behind on that curve. Since this curve is an average representation, it doesn't mean that all insurance players lag behind all health and pharmaceutical companies. There are insurers who are clear outliers on this curve and far ahead on this curve, and we will be looking at one example a bit later. Let us now explore some of the reasons as to why the insurance industry lags behind the other industries on this digital maturity curve. The regulatory environment in which we find ourselves operating is complex and evolving, and we as an industry do find ourselves more focused on compliance compared to some other industries, such as banking. Which naturally leads to a culture of compliance and a risk-averse culture, which we have seen sometimes to conflict with the need for digital experimentation. Insurers also have an established model of the way that they sort of run and do business, and it's been working for decades, and transforming that business is challenging. When you're a sizable insurer, a traditional player with huge operations, it is almost making any change there. It's akin to turning the Titanic around. And therefore, transforming those businesses, we have seen, does pose a big challenge in digital transformation. The short-term insurance industry is also one of the most innovative and competitive. We have complex dynamic features embedded into products, such as cashback, vitality, wellness award programs, as well as telematics, which are all built on legacy systems. Now, changing and making any technology change to those legacy systems is challenging. In fact, bulk of an insurer's IT spend is allocated to outdated technology and legacy systems. In some cases, we have also seen that leaders of certain insurance companies are not always aware of the technology advancements in the industry. And it's already hard to keep up with the pace of the way that things are changing and new technologies are coming up every day. So not adapting and upscaling also places a big barrier to digital transformation. Last but not the least, investment is required to upgrade your systems from legacy to a more digitally transformed systems. insurance industry, compared to other industry, does have a higher regulatory or compliance cost associated, which also does place significant barriers when it comes to allocating those funds to innovation and transformation. Now, let's look within the insurance industry itself and see where the various players are on this digital curve. The insurtechs, the retailers, and telcos all lie ahead of your bancassurers and traditional insurers. Now, if this clicker would just work. There you go. Yeah. In a recent interview with the CEO of Capitec, he admitted that he's more concerned about telecommunications operators and digital payment operators than he is about his local banking competitors. He even said that in his recent report to the board, he dedicated 40 pages just to analyze the digital rivals that have been disrupting the market. So what sets apart these non-traditional players from your traditional insurers? The most important thing is they have a culture of risk-taking. They are natively innovative, we know that, but they also have a strategic vision and which is supported by funding in their digital strategy. They don't have legacy encumbrances, and their customer experience is at the center of all their operations. The playing field is changing, and your customer expectations are evolving and being informed by the experiences elsewhere. So you have to continuously adapt in order to retain those customers. And we do realize that for a sizable established insurer who is straddled with legacy technology systems, with multiple integrations built into those systems, transforming is not easy. In fact, it's hard to see how making any changes to its core will not disrupt its existing operations. Additionally, bringing along your employees, your brokers, your stakeholders along this journey of digital transformation is also challenging. Despite all these challenges, we have seen some incumbents successfully innovating. And one such example is Generali. Generali was founded in the 1800s, so you can see it's deeply rooted traditional insurer, and was one of the first insurance companies to offer comprehensive products. To give you an indication of the size of Generali, Generali currently operates in about 50 territories, writes about 82 billion euros in premiums, has about 68 million customers, and a network of over 160,000 agents. So let's have a look at how they went about their innovation and transformation journey. From after the financial crisis around 2008 and later, Generali found itself making losses every year. Their non-core markets were performing poorly, their coverage ratio was dropping, and they found themselves heavily debt-driven. This is when, in 2012, they decided to enter into a three-year turnaround strategy, which was focused on restructuring and growth. So what they did there was they exited all non-core and loss-making territories, and they focused a lot of their attention on their core business, increasing the core business, so growing it and retaining it, as well as some strategic acquisitions across Europe. By the end of this three-year turnaround strategy, it did, bore the fruits that they were looking for, and it restored their financial strength. 2015 marked the end of their three-year strategy, and what they noticed then was that a customer revolution was on its way, and they refused to fall behind again, like how they did the last time. They saw they had to digitize their operations in order to keep up with the competitiveness in the industry. And this is when they entered into a consulting partnership. At this point, they did not have a clear strategy, but they knew they had to digitize their customer and the agent's experiences, and they embarked on a digital journey to create consistent apps for their customer and the agents. There was also a leadership change that came through in around 2016, and this is when they solidified the strategy, focusing on 3 pillars. The first one was continuously optimizing the different territories that they operate in. The second was making the operations more effective and efficient. And the third, maybe perhaps the most important one, was being data-driven and customer-focused. So whatever decision they made sure that they took their customer feedback into account and the Net Promoter Scores as well. In 2018, they rebranded their 3-year strategy again and articulated their desire to be the lifetime partner of their customer. The word partner here is the linchpin of that strategy because they saw themselves as service partners to their customers and not just an insurance company selling them insurance products. They continued on the innovation journey and embraced the Internet of Things at that time with new products like driver telematics, vitality wellness products, as well as home awareness systems. 2020, with COVID, accelerated the need for more effective operations. And this is when the Group Innovation Fund was formed. The main purpose of this team was to make sure that all the innovation and the processes across different territories were effective and efficient, and they made sure to share learnings across those territories so that their customers had consistent experiences. In 2023, they saw the strategy was basically a success. They continuous, focus on the transformation, and they recorded the best ever operating results and won a lot of awards, including one of the Global Innovator Award. Oopsie.
Just pause. Can we kindly get assistance? It seems that our presenters are struggling with the clicker. I don't know if we might even have an alternative one. But if we feel it's working, I think I'm comfortable for us to continue. But just a note for the technical team at the back that our presenters feel that they're struggling with the clicker.
Sorry about that. Just to continue, so in 2023, they did record the best ever operating results, which confirms the success of their strategy. It is important to note that Generali not only focused on the customer experience and digitizing of that experience, but they also focused on the agents' processes as well as the employees. And employee upskilling is a key pillar of this transformation journey, and they intend to have 70% of the employees upskilled by 2024. So let us bring it back to the African continent and just discuss what is preventing our incumbent insurers from shifting these gears. In the remaining of this presentation, we will be addressing 3 key questions. We will look at the challenges and disablers that insurers face with their digital transformation. We will be looking at how insurers across Africa can progress on their digital readiness, as well as consider what is the role that actuaries can play in supporting their organizations to digitally mature.
So to NIDA's first question, we know that between 70 and 90% of digital initiatives fail. This is because most organizations are not digitally ready. Digital readiness is the ability or the readiness to transition into digitized workflows enabled by technology. The research tells us why some of these organizations are not digitally ready, but it doesn't tell us, it's not specific to the African insurance market. So we undertook some research ourselves. That research was survey-based. It was spread out across the life and non-life insurance sectors across Eastern, Western, and Southern Africa. And we've so far assessed 16 organizations at varying stages of digital readiness or digital maturity. As we continue to add organizations to this insurance database or this knowledge bank, we'll keep understanding better what some of the success stories have been and what those pervasive pain points are. We tried to get a representative sample across both function and hierarchy, so that means sampling back office functions like actuarial and finance, as well as front office like sales and distribution. Again, we tried to get a representative sample across hierarchy, but most of our respondents did tend to be senior managers and executive level positions, and as we continue to evolve this database, we will see that normalize. So how we actually assess digital readiness is by looking at the digital maturity of an organization, and how we rate digital maturity is along this scale. An organization is either exploring digital, doing digital, becoming digital, or being digital. One organization that we know is always being digital is Google. Google's created a culture of thinking digitally, and they've created customer and business models that are quick to adapt to new technology. How they've done this is they've implemented the 20% rule, which you may have heard of. The 20% rule dedicates 20% of an engineer's time, so 1 day a week, to working on a project that they truly believe in, one that they may have conceived or one that they're just really excited to collaborate on. And what that does is it makes Google's culture experimental, and it makes them very quick to adopt these new technologies because they're always rapidly prototyping. At the other end of the scale, the other extreme, we have Sears. Sears was once the most successful department store in the world. They were considered particularly innovative in their marketing strategy with their quarterly catalogs. But they didn't adapt this to a digital world. And so as competitors have come in, competitors like Amazon, who've embraced technology in their operating models, and competitors like Zara, who've embraced this in their digital marketing strategies, they've fallen behind and they've been superseded by these competitors. So where Sears had 7,000 stores 20 years ago, they now only have 11. Next up, we have the doing state. This is where we see most organizations land. What happens at the doing state is that organizations begin to extend beyond their traditional ways of doing things. They begin to improve on their legacy systems, but they haven't necessarily embedded how this will transform their operating models and how they service their clients. They tend to get stuck in a cycle or an illusion of being digital as they continuously try to adopt new technologies without thinking of the implications. One step up from that, we have becoming. At becoming, we've seen a little bit more of a fundamental shift in how they operate, and we see organizations that are far more adaptable in adopting new technology. So thinking back to NIDA's example of Generali, where we'd expect them to be playing is in the becoming and being state. By contrast, where we see the African insurance market, and some of these slides are not popping up with the continent of Africa, but where we see the African insurance market is landing firmly in the doing state. This is evidenced by the fact that in our research, only 10% of respondents said that 25% or more of their current revenue is generated digitally. Now, granted, Africa is not necessarily as digital as the rest of the world, but in South Africa specifically, we do expect to hit a 75% internet penetration rate within the next few years, if not months. So we would expect a slightly higher proportion than that. Let me also point out that this is an average, this landing in the doing state, and some of those organizations that we assessed are much further along in their digital journey, whereas some are really only kicking that off and are sitting at the exploring state. So how do we actually assess digital maturity? We look at 5 dimensions. The first dimension we look at is technology. Technology is what underpins your strategy. Again, adding new technology is not necessarily transformative itself. Within the technology dimension, we saw most players fall within the doing state. We saw an average score of 53%, and we saw slightly worse results in Western Africa versus Eastern and Southern Africa. The next dimension we assess is operations, and what we look for here is how able you are to execute and evolve your journeys, be that customer journeys, agent journeys, or colleague journeys. This saw very similar results, sitting at 55%, and again, we saw similar results across regions here. The next dimension we look at is customer. Again, very similar results, 55% similar results across regions. And what we assess here is how much the organization places customer and customer experience at the center of their digital design. The next dimension we look at is strategy. Strategy is about how you execute to enhance a competitive advantage and to achieve your digital goals. So we saw a slightly improved score under strategy at 59%, but still sitting within the doing state. The final dimension we look at is culture and leadership. And what we ask here is whether you have the right people and structures in place to achieve your strategy. This was a little bit of an outlier. We saw a score of 64% landing in the becoming state, and we'll unpack that one especially a little bit later. So let's take a deeper look at technology. Within technology, we saw two key disablers to digital transformation. The first is data value realization. Most organizations that have successfully transformed cite being data-driven as a key reason for their success. However, what we found is that only one organization that we surveyed described their analytics capabilities as being mature, and most said that their utilization of data was fairly limited, and their ability to share data with partners is extremely limited. Given the other transformation that we're currently in as an industry, the one of moving to IFRS 17, which is obviously a far more data-intensive standard, I think it's worth reflecting how much the investment we've made in getting our data ready for IFRS 17 has helped the wider business, or whether as an industry there's more we can do. The other key disabler we find are legacy systems and architecture. So we know that cloud computing is one way to accelerate your digital transformation journey, because what that enables you to do is to keep adding new technology far more effectively, and it enables you to scale your operations far more efficiently. But what we found is that only 21% of organizations have actually transformed more than 50% of their organization to cloud computing. We find a further 43% saying that more than half of the organization is still running on legacy systems, and we know those to be cumbersome and incompatible with new technology. Under the operations dimension, what we're really looking for here is, or what it means to be digitally ready within this dimension, is to be particularly flexible and efficient in adapting your customer journeys, your agent journeys, and your colleague journeys. So how flexible are we? We found that only 7% of organizations said that they were able to adapt or make changes to their products or their customer journeys without significant investment. So then how efficient are we? Well, no organization said that they had implemented process automation to the point where they could describe this as self-optimizing. And no organization said that they had implemented process automation which touched any of their other ecosystem partners. Now, we know that most organizations are automating, but again, this tends to be an example similar to what NIDA brought up, moving from a manual Excel spreadsheet into an automated reporting dashboard. That's more efficient, but it's not necessarily transformative. What might be transformative would be embedding certain metrics into that dashboard that triggered an outcome. So maybe looking at the number of complaints along a certain path on your customer journey, and if that exceeds a certain number, it triggers a redesign of that process. That might be considered transformative. The next dimension is customer. 42% of respondents said that their organization does consider customer experience in their digital design, but that this tended to focus on only a certain function or a certain part of the customer journey. Now, we know that 65% of consumers say that their experience on a website or an app directly leads them to either recommend or not recommend that website. So how do we create an optimal customer experience if we don't necessarily know what optimal looks like? The disabler we find here is that there is limited customer sentiment monitoring and limited social media integration by most of these organizations. So 87% of organizations said that they have limited to no social media integration, and only one organization said that they've currently automated their customer sentiment monitoring using social media listening. We also find limited co-innovation. So while 40% of organizations said that they've piloted co-innovation efforts, only 7% say that this is a regular part of their product development cycle. What these disablers manifest as is a low take-up of customer self-service portals and an inability to respond to customer requests and distributor requests in real time. So how do we actually start solving for all of these disablers? How do we solve for the fact that we have legacy systems that's hindering our ability to create efficient processes and to use our data? How do we solve for the fact that maybe we don't know our customers as well as we thought we did? Going back to the Generali case study, Generali did this by implementing their global centers of excellence. So the first center of excellence is the group innovation team. This is not a team tasked with innovating or coming up with ideas. They execute and facilitate the execution of innovation where technology is related. So they do this both internally and externally. Internally, they go into specific business units and specific territories, and they make sure that they have sufficient resources and skills to execute. They do this externally by investigating new technologies and investing into incubators to make sure that that technology that they bring into Generali is fit for purpose. The next center of excellence that they've introduced is the Smart Automation Center. So this operates on a micro and a macro level. On a micro level, they look at the scope of responsibilities of every employee, and they say perhaps 10 to 15% of this can be automated. Once you start stacking up that automation, you begin to transform the operational efficiency of the business as a whole. And you begin to get your employees to start thinking digitally. On a macro level, they look at their insurance value chain and they look at the portions that they're able to fully transform, like their claims management system, which is now fully automated. The final center of excellence that they implemented is the Analytics Solution Center. So given the vast amount of data that Generali has across their 50 territories, they implemented this Analytics Solution Center to consolidate that data. And they underpin this with certain principles in how they use that data. So they ensure that their data is easy to access, it's secure, it's of sufficient quality, and it's ethically sourced and used. They layer on top of that consolidated warehouse, they layer on top of that various analytics tools and models, which we could get into, but ultimately what those tools are answering are three specific questions. What do our customers need? How do they behave? And what are their pain points? And when Generali can answer those questions, they're able to service their customers when they want and how they want.
Jody? Okay, so just a bit of a recap. I think just to try and describe this model to everybody, the idea behind these 5 parameters is that they all need to progressively mature and unilaterally progress so that the efficiency of all of these parameters coming together can be benefiting the maturity of an organization. Having said that, if an organization doesn't have a clear steer in terms of the direction in which they're heading, be it a purpose, be it a strategic vision, and equally, if it doesn't have leadership that's bought into it and driving that future, we found through the various industries we've surveyed that ultimately whatever investments are made in technology, operations, and customers will yield poorer returns. So I guess the point I'm trying to make is that it should not be a surprise that when you see the progressive nature of the respondents we've had around strategy and culture and leadership being at a higher level of maturity, that should not come as a surprise because those are leading parameters. I think I'm going to have a battle with this thing. There we go. Okay. Yeah, let's do that. Thank you. So we're going to change things up a little bit here. Thank you, Jody. Okay, so strategy definitely, as I said, is one of the lead sort of factors. And what we found amongst a significant number of our respondents across the continent is that insurers are beginning to now dedicate and recognize that keeping digital transformation as a dedicated focus is critical. And the way this manifests itself is either through a dedicated role or a dedicated individual driving that, or equally within the leadership, there is absolute focus on digital transformation. So I think that's a fantastic progressive statistics for the industry. Where we do struggle, perhaps, thank you, Jodi, is that the articulation of a clear digital strategy isn't as progressed as you'd need it to be. And that doesn't mean the organization doesn't have a strategy. What it means is that the organization hasn't thought through what does digital transformation mean in enabling the strategy. So there's a nuance there. So you might have a vision, you might have a purpose, but how does digital transformation enable that vision and that strategy to be realized is actually probably not as progressed as actually the need and the requirement to have somebody driving that. And what's worse is we've spoken about partnerships and ecosystems. And what's even less progress is the thinking on the continent within the insurance sector around the need and the value a partnership and ecosystem strategy will enable, how that can enable the business. So having said that, what is important is to essentially then sort of ask yourself the question, where is it that the industry sort of lacks, and why is it that the industry lacks in terms of driving that? And part of the answer is actually leadership has cited in the responses that essentially they don't have the skills, nor do they have the experience of figuring out what good looks like. So oftentimes, the leaders within our organizations and the people that lead these organizations effectively say that we know how to do business a particular way. However, what we need is an outside-in perspective to sort of challenge the way we think things through. And if you think about what NIDA shared earlier on, when we think of the Generali journey back in 2012, back in 2015, the leadership recognized they needed to do something different. And it wasn't that they chose to think of these alternative futures for themselves by themselves. They actually chose to partner with external agitators, external perspectives, to give them a sense of what good essentially looks like, and therefore challenging their own mindset and their own experience. Ultimately, that is probably where I think the industry needs to start sort of thinking through. And by bringing in external perspectives, be it from other industries into our industry, we can actually start challenging our current mindset. Let's maybe take a look at leadership, and that's kind of been the most progress. And I think that's really, really interesting to see that, because oftentimes we get accused as an industry that we have mindsets that are traditional, mindsets that are not transforming. And I suspect COVID in 2019, 2020, 2021 has actually forced all the way from board members, non-executives, as well as the leadership of our organizations across the continent to rethink, how do we survive, how do we thrive as a business? And what we found very interesting is that respondents have cited leadership as open, has really sort of pushed the purpose of the organization, has really incentivized and encouraged the organization to try and embrace this digital transformation. And frankly, most organizations didn't really have a choice but to do it. But what's good is that it's been translated to not having a choice, but actually wanting to do things differently, to grow the businesses differently. And what's even more interesting is that leaders have not only taken that mandate for themselves, they've started to create environments that are innovative, that are encouraging of the employees to challenge the status quo, perhaps even take some entrepreneurial and innovative risks, and increasingly allowing their employee force, where the ideas get generated from, to potentially also be okay with failing. Because the challenge with a highly compliant environment is that we don't allow failure. In fact, we potentially punish and frown upon failure. And what's really interesting and promising to see is that there are organizations that we are obviously looking at are beginning to do that. And there are organizations that are far better at it. But what's interesting to hear and to see is that almost across all of the respondents, that there is a good progress on culture and leadership. Okay, so perhaps then when we sort of look at all of this, we take a look at having invested in culture and leadership, having started to think about how do we do things differently, starting to use technology, data, starting to transform your operations, starting to look at co-creation. One has to ask the question, well, what does it look like when these things start to happen? And perhaps some anecdotal or useful sort of barometers or litmus tests for all of you is this, that when you start seeing your organization have far more co-creation, co-innovation opportunities with your customers or your advisors, that's when you know you're beginning to embrace the change. When you start seeing your product innovation from ideation to innovation to launch, to full-scale launch, when you see that time frame scale from 36 months to 6 weeks, that's when you know you're beginning to push the envelope. When you start, from a technology perspective, being brave enough and courageous enough to sort of try new emerging technologies and also be okay that those integrations may not work and lead to failure, and the more you do that, the more you gain confidence, that's when you know you're transforming. And so on and so forth. And lastly, perhaps an example is where you as an organization start seeing your ability to partner, be it at the front end, back end, and we'll talk about Generali in a second. So long as you have, you start seeing those partnerships manifest and helping you grow and expand your reach to different customers through different services, that's when you know all of these things that you're investing in are beginning to come together. So perhaps then, sorry Jody, we can now look at why Generali and how Generali did that. So I think the first thing, as both my co-speakers have said, is that Generali recognized that they had a burning platform. They needed to do something different. And actually the topic of this conversation is actually what is affecting our industry. And yes, we're comfortable, we are an organization that is self-transforming, but the forces of change outside of our industry are actually big. Whether we take a look at the retailers, whether we take a look at the telco players, but even other industries that are encroaching into our space. Why are they doing that? They're doing that because they have the benefit and the value of customer relationships. And so the key question is, what did Generali do differently, having recognized that burning platform? And I think the first thing they did was actually create a shared purpose. And I know to a bunch of very technical actuaries in this room, that might seem fluffy, but the reality is we're all human beings. We go to work, and what gets us to work is probably the salary, but what keeps us at work is actually a shared purpose of why I'm doing what I'm doing and why it makes a difference. And what Generali, in this particular example that we cite, did right was they actually thought about ultimately getting value or providing value to their customers throughout their lifetime meant that every single person who came to work themselves were a customer of a business. And it began to give the byproduct of creating a sense that actually the company cares. And so they were very, very clear about putting the customer at the center of everything. And oftentimes, and we've heard this, it's a cliche, but I think it's still worthwhile sort of pausing and reflecting on this. Generali chose to create value through service, not through product. And the value that they chose to create was for their customers, not for themselves. Because in creating value for customers, they created value for themselves. So that was important. And that started to manifest in itself in the following way. They became obsessed, in fact neurotic, about getting customer feedback. And once they realized that actually the value in getting that data and doing something with that data and seeing what it does to the organization and how you engage with the industry as a whole, they began to start realizing the value of the investments they've made. And to the point that they didn't only just listen to their customers, they encouraged their internal customers, the colleagues that they worked with, to be treated as customers, and ultimately created service that led to empathy and care for all stakeholders concerned, obviously centralized around the customer.
Ashish, sorry to interrupt, if I may. I see people looking anxiously at their watches. We are 10 minutes. We are going to give you an extra 5 because of that technical glitch at the moment. So we will still leave about 10 minutes for questions, and I see there are some coming through on the app already. But just to let you know, that's how we'll move on from here. Thanks.
Thank you so much. Okay, so they also chose not to go alone. They chose to partner. They chose to partner for internal capabilities, but also external distribution. Equally, they chose to prioritize learning. They did not deny their individuals and their colleagues to learn new skills, because ultimately the people that were going to create the transformation were their staff. And investing in those staff was an important key enabler for them in terms of learning new and creating new digital skills. But most importantly, they had a clear implementation plan. And that implementation plan really was centered around being clear about what the milestones were and what the metrics were. So when we look at some of the challenges that we have found from our respondents, not only is there work to be done perhaps around the technology ingestion and diversifying into new emerging technologies. Not only is there work to be done around creating a compelling digital strategy and embedding that into the way the organization drives forward, but I think the key question is, to what level are these organizations that have responded, and perhaps in your organization, are you investing in the future? And that's investing in technology and capabilities, but also investing in the people that are going to drive this. Because ultimately, this is all about reskilling and upskilling. And there's really two options that we considered. Either you choose to make a significant investment into disrupting the core. So this is analogous to diving in at the deep end. So recognize that you need to do something and make a decision to do it. But the alternative is equally attractive, but perhaps even more attractive, and that is to disrupt at the edge. And here, what you're trying to do is identify 1 or 2 critical shifts and transformative innovation opportunities where you actually seed those on the edges with new technology, perhaps new skills, perhaps a new way of doing business. And as you learn from that, those disruptions on the edges become bigger and bigger. And over a period of time, they tend to be far more significant in relative terms compared to the core. Now, there's pros and cons of both. But eventually, if we take a look at the Generali case, Generali chose to start disrupting at the edge. They chose to learn, and through the success of learning and failure, they learned how to do this better, and eventually they transformed to disrupting the core. So some of the things that JODI spoke about in terms of the centers of excellence are actual core capabilities that they've realized that they need to invest in. But that didn't happen right from the beginning, as we saw. They started to learn and then eventually chose that these are the core capabilities that we will invest in. Finally, in view of time, I guess in summary, what we've tried to share with you is that there is a significant level of awareness around the transformation and the challenges of transformation across the continent. There are some significant areas of capabilities, but obviously there's a long way to go. And our real job here today was to try and give you a sense of where your peers, your competitors are potentially focusing on. And perhaps when we reflected on whether this is going to be a topic that's going to be of interest to the audience, we really asked ourselves the question, what is it that as we as a profession can do and are willing to do? And we actually, a few weeks ago, about a week ago, we asked on LinkedIn, do we as a profession believe we have a role to play? And perhaps here, NIDA, you can share some results and conclude. Thank you.
So we carried out a survey on social media just to understand if actuaries have been involved in any digital initiatives within the industries. And only 13% said that they have played a significant role. I guess it's just me and the clicker that doesn't work. Only 13% said that they have played a significant role in digital initiatives, with 50% saying they had minimal involvement, and the remaining 37% said that they played no role at all. And we want to challenge this because as actuaries, we believe we have a crucial role to play in digital disruption and digital advancement of our organizations. As actuaries within our organizations, we are influential because we are part of the board, the EXCO, the risk committees and product committees. And a lot of decisions that are made within organizations are influenced by an actuary's sentiment. Yes, we are here to predict and create a level of certainty, but if that's all we are doing, then we are at the risk of falling behind and staying behind. As we have spoken already about how the playing field is changing, and now we have digital savvy disruptors in the market who are going to become significant players. They start off small by renting a license, but then grow and eventually apply for their own insurance license. We are not saying actuaries should become digital experts. All we are saying is that there is a role to play in your organizations. We are involved in significant strategic decisions. Our single value add is relating to the risk and our view of the risk when we make those decisions. Perhaps it's worthwhile changing that view and looking at what additional benefits can come from additional perspectives, our perspectives in those organizations. And we want you to continue to think about the role that you play in your organization, the influence that you have, and think about a mindset shift from a risk monitoring role to helping a business make more risk-informed decisions. Okay. We would like to continue to build on our digital maturity database, and if you are keen to get an outside-in perspective on how your organization ranks on that digital maturity curve, reach out to us, and then we can help facilitate a digital maturity assessment for you and help you identify gaps and accelerators that can optimize your digital journey. Thank you.
Thank you so much. We have got just a few minutes for questions from the floor, and I'm sure there must be, so just raise a hand if you'd like to ask a question, and we'll get a microphone to you. In the meantime, I'm going to start with one that's come through on the app from Sikulele Khumalo, asking, do you believe there's room for a digital regulator that focuses more on standardizing traditional regulations to adapt to these new technologies with the ultimate aim of reaping the benefits of digital transformation for clients in terms of better products and pricing efficiency?
Yeah.
Thanks.
I think the answer is obviously yes, right? I mean, there's not a single stakeholder, be it the regulator, industry bodies, insurers, reinsurers, that will need to respond to these forces. So whether the regulator transforms in line with the industry or as a lag to the industry, I think the time will come. So the answer is absolutely a yes.
Thank you. Any hands in the audience? I'd like to ask a question, if I may. That is, what do you do about the customers who don't really feel confident joining you on this journey? I know it's a shrinking subset, but they're still there, particularly for the big legacy insurers who may have lifetime customers who are distrustful of technology, who are even feeling vulnerable because of the advances. Is it important to still include them in these strategies?
Absolutely, yeah. I mean, I think if you look at the two scenarios for transformation, one was about transforming the core, which actually totally disrupt the core, which means imbalance and remove your current way of doing business, to the alternative, which is disrupt at the edges, which means that for a period of time, it could be 10, 20 years, your core is there to serve your business of today. The idea about disrupting at the edges is to learn how to do business of tomorrow. And if that continues to grow, then you give the space for that to grow. And over a period of time, one becomes more significant and the other becomes less.
Thank you.
We can do two more questions, perhaps. I'll start with one on the app, and thank you. The gentleman had his hand up. So, Ash, Jodi, and NIDA, Andre is asking and mentioning that the alternative model to successfully accelerate digital transformation is to position the capability outside the core, thereby transforming outside in. And his question is whether the outside-in model is used often or not.
I think I understand the question, right? So the outside-in model is, in a way, what we're describing as the alternative to transforming the core. It's actually sparked a thought in my head that oftentimes, I mean, if we think about it, and it might be a cliche and it might not necessarily resonate with you, oftentimes when we do a lot of product development, we do it from an inside-out perspective, like what processes works, what's our theoretical view of what our customers need, right? And we've heard this for decades, that we actually need to be doing much more about responding to customer needs. And that in itself is an outside-in perspective. So do you have a sufficient understanding of the pain points of your customers, the needs of your customers, and there's not a singular group of customers, it's varied. The idea about disrupting at the edge is actually to try and take these co-innovation, customer-led innovation opportunities to drive an inherent behavior, a change in behavior in insurance organizations, that we must actually develop products and services, not just products, services as well, that actually resonate far more with our customers. So an outside-in perspective is absolutely the sustainable way of doing this.
Thank you. Let's go to the floor. Gentleman's question over there. Thank you.
Okay, I think Ashish answered the question slightly, but the thing is, the problem is the value proposition. With today's industry, the insurance industry, you might find most businesses are actually performing well, so they don't feel a need to deviate too much into those digital transformations. With Generali, as an example, they had to do this, you know. So I think the trick is finding a way to convince the industry that our customer of the future is a digital client, but that's the problem. So we don't know how to, we don't know how to share that with the corporation to say that our customers are for the future, and that's purely digital, regardless if we don't really need it right now.
I mean, I think just the one comment I'd make. Sorry, NIDA, why don't you go for it?
Okay, cool, awesome. Okay, so Generali's first 3-year turnaround strategy was triggered by them making financial losses. But after that, in 2015, they actually did restore the financial strength. So they didn't have to technically, theoretically continue. But they saw there was a change coming through. Customers' demands were changing. And they didn't want to fall behind. So they said, we will continue on this journey of innovating and making sure that we meet our customer expectation, and I guess set a standard in the industry so that we don't fall behind again. And the example I gave of that Capitec CEO, so leaders in the business are seeing this, and they are realizing that there is a real change. The way technology is evolving, it's evolving at a ridiculous pace. Like, I suppose last year this time, most of us didn't even know about ChatGPT. And now there is not a person who doesn't know about it or doesn't use it. So the change is coming through organically as well. We are realizing the customer expectation, our own expectations are changing. So I think it's just a matter of time before, we start taking this seriously.
Thank you. Are there any more questions from the floor? And if I may, I'm going to wrap with one last one that's come in on the app through from Darren, who says there's an advantage of being a first mover in digitization, but first movers can also be penalized through increased costs and longer timeframes to implementation. His question is, how can insurers who are waiting for everyone else to move first be encouraged to embark on the digitization journey?
Yeah, I mean, I think it's always a function of, I think the conversation or the comment made earlier is to what extent does the leadership body, be it the board, the executive, feel that there's a burning platform. And ultimately, every organization has to do what's right for its organization, right? So risk appetite, your particular customer group, whether they're transforming at a pace compared to somebody else's. Ultimately, my only observation from the clients we work with is that every single organization is certainly looking at the threats to their business, and the more significant those threats are, the more significant your response is going to be. JODI?
I think this is also why we present the idea of disruption on the edge alongside disruption on the core, because what that enables is that environment where it's ring-fenced and allows you to be that first mover while limiting that risk. You're not disrupting how you're serving your current customer base, and you're not necessarily disrupting the entire market. It gives you that environment to test. So I think that's one of the ways in which we overcome this risk aversion.
Thank you so much, NIDA, Ashish, and Jodi. It's been absolutely fascinating listening to you this afternoon. Thanks, everybody, for your engagement. And just to say to those on the virtual stream, we really sincerely apologize for the technical difficulties, particularly in the previous session at 10:15. It was caused by an internet problem in this particular session room, and that meant that we couldn't live stream the session out fully to our virtual attendees. This is in stream 2. Now, the session was recorded, and it is going to be available within the next 24 hours. So if you are worried that you've missed important content, please do know it's going to be posted on the app, and you will still be able to claim CPD points for watching that recording. So sincere apologies for that. We're told it is hopefully fixed now, and hopefully that is the end of that. That brings us to the end of our first concurrent session. Just to remind everybody, it is a break for lunch now, and if you are wanting to attend the South African Actuaries Abroad session, that starts at 12:25 in Ballroom 1. Just grab a lunch pack on your way in if you'd like to do so. We will reconvene at 1:15 for the next of the current sessions. Thank you, everybody. It's been a fascinating morning so far.